This guy took $10 to $300,000 in 4 steps, and here's how you replicate the same thing. See, your life has spoiled if you don't do this. Your life has spoiled. Don't even waste your time trading, because trading is strategic, trading is structured, and you have to follow a particular pattern, or else you are never gonna make any money. And I'm going to show you the perfect structure you need to follow to actually bank crazy cash. So basically, if you want to make money trading consistently, you need to follow 4 structures. The first structure is progression structure. This is where you look for the rejection candles, look for where the rejection starts from, and then look for all the candles that form after the rejection happens. And then when another rejection happens, you want to mark it, then count the candles that form 1, 2, 3, 4, and basically this one is actually more than the previous one, which is 3. And then if you look for another rejection candle, which is at that point here, if you count the rejection candle 3, 4, 5, 6, if the number is more than the previous projection or the previous reversal, that is to show you that the one that is coming in future would be more. That means this one will be like 7, 8, 9, 10. So basically what you want to do is that you want to make sure you catch the buy. So if the progression is increasing, that's to show you that the trend is actually going to keep increasing. So basically what you want to do is that you want to look for entries on lower time frame, which can either be from the low of the progression. So you can look for entries from the low of the progression, or you can look for entries at the high of the progression. So basically you just look for the entries as price reach the high of the progression. It's something like a candle range. You create an upward move, then a downward move, and then another upward move, and then when price is at almost breaking out the upward move, what do? You look for entries. And basically the guy entry was around there. So basically he waited for price to take out that progression there, give us the progression, and then when price was like at the low, he did not enter at the low, but you can enter at the low, and I'll show you how to do that. What he did was that he entered when the price was at the high there, when it was almost breaking out from the high. That's when he bought and followed the progression, and I'll be teaching you how to do that. So basically, if you don't want to blow your account at this moment in time, if you want to get like 1000% in one trade, if you want to go from $50 to like $10,000 in one trade consistently, you want to mark all those projection points that I told you or I showed you, because this part is very important. You need to understand that price move on a cycle. If you don't know the cycle that is currently moving on, you are going to blow your account. There's nothing you can do. So you need to make sure you are going back 3 times or 4 steps before you enter a certain trade, and you want to make sure all the same structure, the same cycle, the way price move is repeated in the past. If you can't do this, you will never make money. And if you don't know how to do this the right way, you will never make money. It's better to watch one video to the end and know the secret and just do it and stand like get 70% chance, 80% chance of flipping your account, and just be doing trading blindly. Don't trade blindly. Follow projection, follow structure. So basically, from the monthly time frame, I've dropped down to the daily time frame, and basically now you want to understand or study what happened in the first projection. Like if you look at that point there, that's the first line there, and you want to study what happened on this first line, and then go back to the second line and the third line, or maybe even the fourth line, to confirm if it is price is actually moving the same way. And then when we have confirmed it is moving the same way, we will now use it for our previous entry, which is the entry that the guy entered at, that took his $10 to 300k. So if you look at this point there, you see that price was literally respecting breakout. And basically what I'm going to do is that I'm going to break down what happened here, how this guy got entries inside this point. But first thing first, I want to show you all the projection points on daily time frame. So I'll still show you the second, the third one, so you know that all of them are moving in the same cycle. And then when I've proved that they are moving in the same cycle, I'll now drop down to lower time frame on every single projection, and then show you how to get entries or on those lower time frame projection. And if you look at this projection here, the second projection, you can see that it's still following the same pattern. Price was literally respecting structure, and the breakout was literally at the tip of that point there. You can see that's literally acting as a support zone there on the daily time frame. So basically, from the 1 and 2 projection, what we noticed is that price always breaks out from the resistance point. Basically, it always breaks out from the resistance point. And like I said before, I'm still going to go down to lower time frame to show you how you can capitalize off these entries in this point in time. But first thing first, let me just show you that all this daily projection were literally following a particular structure. You can see how everything was respecting each other. But if you are going to take trade on this daily time frame, it is going to be very, very risky. So I will not advise you to do it. And then if you look at this second point, this third point there, you can see it's still selling the same structure. The line was perfectly in line with structure there. You can see how everything was respecting each other. They were standing together literally. And this is to show you that all 1 day price action were following a particular pattern there. You can see the one I showed you before, it still followed this particular pattern, respected. And basically at this moment in time, you have gotten the intermediate time frame projection. You've known that everything works together, everything, they are following the same structure and the likes of that. And then basically that's to show you that the fourth structure, which is the previous one, the one that the guy trade, you want to use the same entry. And if you use the same entry, get re-entries this way, you can see there was re-entry, you would have gotten bastard profit using it. So the tip is that you want to get monthly projection and see if the progression is happening, which is if the candles are increasing. And then when you see the progression increasing, what do you want to do? You want to go to the daily time frame to see if structure is aligning together. Like if you go back to the monthly time frame, you can see how everything is you want to go back to the daily time frame to see if all structure is aligning together. 1, 2, 3 structure. And then when we see that this structure is aligning together, what do you want to do? You want to break down on 30 minutes how you can capitalize off all those previous structures. That's basically it. How you capitalize or what price expect on all those previous structure is what price will respect on the present structure. So basically is as if you are getting free expo in the market. Like you can see that this point there is what we call the impulse point. That's it. This is where the whole momentum and volatility in the market kicks off from. And you don't want to enter at this impulse point, which is bringing us to number 3. You don't want to enter at impulse point. You want to enter at the continuation point. So basically, when price breaks out from all those projection points, there's the impulse point, which is when price, like volatility, enters the market, which is that point and then there is now the consolidation point, which is this second point there, the continuation point or the consolidation point. So basically what you want to do is that after the impulse point has been triggered and price has broken out, you want to scale through the continuation point. So if you want to scale, you can take this point as a mini support zone there. You can see get some consolidation and you are good to go. You are making bucks. It's very, very simple, and we can even take this step down to lower time frame to explain it, but I'm not going to explain this one on lower time frame, because if I say I want to go back to 1 minute time frame, it's not really going to show me that stuff. So let me just keep it simple there. But the guy main entry, I'm going to go down to 1 minute time frame to explain it so you understand. So there was consolidation, and what do you see happen? There was a breakout. So that is literally the phase in this 30-minute time frame. The phase in this 30-minute time frame is continuation and breakout, continuation and breakout. So when price hits your impulse point, you want to wait for price to create consolidation points, and then you follow the phase. And if you follow the phase, which is consolidation and breakout, you would have made a lot of bucks. It is very, very simple, and that's just number one. That's just number one. If we go back in time to the second entry, you will see that both of them are similar. That's it. If both of them are not similar, you don't want to do it, you don't want to trade it. But if both of them are similar, oh my god, you would be printing racks. That's it. It is very, very simple. Everything is structured in the market. Most of you think you just need to know strategy, mark different support and resistance. No, you want to make sure your support and resistance have structure. If it does not have structure, you will never be rich. So basically, the first touch is the impulse point. This is the second trade. The first touch is the impulse touch, and we can call this other point to the impulse point, but basically let's just leave it as it is. So the first point is the impulse point, and then after the impulse point, what do you look for? You want to look for the continuation point. And if you look at that point there was something like, consolidation. So you want to scale from this point, but this point is too small to scale. So if it was me, I'll be looking for a much more cleaner entry to scale. So if you zoom out, you will see that actually that point that I marked out before was actually a good scaling point. That's literally a scaling point. So the one below is the impulse point, and the one at the point here at the distance is the continuation point, and this is where we want to scale. That's it. We want to scale. You see that it's following the same structure as the first one. The first one, there was an impulse, and then after the impulse there was a scale point. And if you look at this point here, that's it, another one, another scale point, and this one is in the form of consolidation or liquidity. You can get another re-entry at this moment in time, or you can even get many re-entries at this moment in time. Like if you look at that small pullback there, that was literally a trap, a volume trap there. Price went up, came down, went up again, came down, and respected the middle of that point here. That's literally a trap. You can just put your stop loss below it and you are good to go. It's very, very, very simple. And then if you go forward, you can see that another phase happened there too. Just look at it, another phase happened. If you look at that point, there was something like a consolidation happening, and basically you can just scale this one too. It's very, 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 very simple. You can just scale this one. If you scale this one too, you would have got like 3, 4, 5 entries. It's crazy. This is how it is. This is how you beat the market. And if you think this stuff is actually a scam, that it does not work, we can still go back in time, because this is just the second one. And then when we get to the third one, you can see that's our green line there. What we want to do is we want to first look for our impulse point. So the impulse point is the first touch after or before the breakout. So that's the first point, the touch. So that one you don't want to trade it, because you can never be sure that that's the touch, because in the past there was different touch used around that point in time. So you only want to focus on the one that really broke out, because if you try and trade all this one, there's a probability that it might get liquidated. You can see there was a lot of consolidation there. So when any touch happens, you don't want to really take it seriously. That's it. Don't take it seriously, don't trade it. Instead, you look for scaling entries, and it's safer to trade the second or third scale entry. Like if you look at that point there, that's the second scale entry there, and basically you can just trade this one. Look at it, you can see it was respected, sweet demand zone there. Just enter and you're good to go. Very simple. Get the impulse, get the scale, and you're good. While on higher time frame, you check the projection. If the progression of the candles is increasing, which is the number of the candles is increasing, what you want to do is that you want to you know that the trend is going to keep going up, and then you want to look for projection entries to capitalize off it. So basically that's 3 entries I've explained. So after explaining this, now I want to explain or use this same concept on the previous trade, and those 2 red lines are literally the guide entries. The first red line is the first entry, and the second red line is the second entry, and I'm going to be explaining both of them, which made him take $10 to $300,000 in just 2 trades. So how did he do it? So basically, the guy first and studied all the projection and the likes of that, and then what he did is that he saw that this point is the breakout point. This is where price was breaking out from, and the guy did not really take this point seriously. You don't want to take the breakout, the first point whereby price breaks out from, or the likes of that. You don't want to take it seriously. You want to wait for it to break out, finish, and start going up, and then that's when you start looking for entry. So basically, his entry was around that point here, and I'm going to be going down to lower time frame to explain it, because on 15-minute time frame you will not see anything here, but if I go to like 1-minute time frame, you are literally going to see what the guy saw, and it's crazy. Well, first thing first, let's just explain it on like 5-minute time frame. So basically, the first line is entry, and if you look at that our 5-minute entry there, you see that the price action here is somehow sketchy and rough. It's sketchy and rough. You can see that it was giving us something like a upward trend line and the likes of that, with multiple retests, up to like 8-9 retests at this moment in time. So what do you want to expect? What you want to expect is that price should break out from this point. But if you want to get entries inside of the consolidation, then you have to go to lower time frame. But if you are good with this M55 entry, you can just like enter at that breakout there. When price is consolidating, you see that the line is already getting much more steeper, and basically what you want to do is that you just enter at the lowest point and you are good. And you can see that the line or the breakout only happened when price got away from this point here. So basically, this point is the point that is hindering price from like really going up. So when price literally broke out from it, what did it do? It started spiking up, and that was what supported structure here. So let me just show you on 1-minute time frame how you can get like tighter entries, and that's bringing us to number 4. This is how you get tighter entries after securing the points that you want to enter at. So basically, if you want to be getting like 100 on one trade, you want to be risking 1 pip stop loss, and then you want to be targeting 100 pips, which is basically 100 that means if you risk $20, you're walking away with 100 times that $20. You want to always look for 1-minute entry. So that's the points there where price that is stopping price from breaking out, and then when eventually price broke out from it, what do you see price do? It started reacting to zones here. You can see it reacted to something like a demand zone there, and then there's another thing there which is another demand zone there, and what do you see price do? Price still reacted off it. So basically, you can enter at this demand zone there and just scale up, which is what I'll do if it was me that was trading the stuff. I'll enter at the first one or the second one and then scale up, or if you are very greedy, you can enter at the third one. And basically, if you look at that point there, you can see there was liquidity around. You can see those 3 touch there. That's liquidity points there. So basically, that was like confluence for this entry, or let's just call it another block. And if you want more confirmation or more entries, you can just scale around this point in time here. Nothing crazy. You can see price just came back to retest that point there, and then it went up. You can scale all this one, but since they are not really strong like that, you can just choose to like just enter and go out and leave those ones that are still lower, but still it's all good though. You can see keep scaling, and you can see that we're almost nearing the second entry which the guy entered at, and at this moment in time we have already reached the second entry, and this was what the guy saw. The guy started seeing more demand zone there, and then what did he do? He started entering at all this other demand zone. You can see that's another demand zone there, and the guy literally just kept sniping it. You can see free money. So from that first entry, you can see that you can scale to the second entry. You don't really need to close the trade, but the guy closed the trade, and basically it just kept scaling. You can see that's another retest there, another re-entry there. You can close, add more lot size, increase your lot size, and you are good to go. And that's basically how this guy was able to do crazy numbers from the first entry to the second entry. And now he was able to do this and take his $10 to $300,000, which is crazy, bro. Basically from the guy video, this is the only thing you see. He hid all his entry. He didn't even give you any idea of why he was buying at that point. He was just buying. So I had to be strategic to find out his secret. Like even the second trade like this, he went to buy on like, it's 1 hour. Yes, 1 hour time frame. He did not show his entry. He did not show any proof or any idea of how he was able to get this entry. That was why I had to break it down for you guys. So if you got value from this video, like, so click link in description, and I'll see you guys in my next video. And if you want result like this, click link in description. Peace.